Hopefully you had a good day today. Today we're going to do a Q&A/market review and some journal tips for obviously today's price action and kind of review from the week. I think we'll probably do another one this weekend because more of like a whole weekly review. I'm going to leave some technical things out of this, but if we can fit it all into here, then I'll try to. But otherwise, we'll probably have another one. You know, the weekly outlook review will be on Sunday or Monday. Otherwise, we'll try and squeeze everything into this. So the agenda for today is reviewing a little bit of today's price action in regard to the weekly outlook we had from Monday and Sunday. Answering obviously any questions you post into the chat here, and then answering a couple of questions that I got in DMs in on the general chat. So obviously, if you have any questions related to concepts or things you're struggling with, you can put them in the chat. We'll try and answer those. And we'll start with the review for today. So not too bad of a price action, I think, today. And hopefully you were able to capitalize on some of it. We did a stream this morning, late stream. That tape reading stream is posted into the YouTube vid section. So if you want to go back and watch just a couple of things that I was pointing out, that's available to you. Overall, a bit of a challenging week to find high quality setups unless you're already expecting some kind of scalping mentality. Today wasn't too bad. I think in terms of bias, I'm just going to briefly go through it. You have the run on sell side going into the 9:30 open. 9:30 opens up. Nice expansion up into the London high, which is a premium buy side pre rate. So you have a discount retracement back inside the range. And then we had 10 a.m. news today. And I would suggest if you have time, go back into that tape reading stream because the first 15 minutes will kind of elaborate on the bias and whatnot. But I was talking about from Monday how today was probably going to be the best setup in terms of the opening range, or sorry, not the opening range, the what was going to be offered in terms of holding a trade. So this is from the post on what is this, the 1st, so 4 days ago. So I talked about how Friday, this is what my expectation was going to be. So generalizing, obviously based off the price action and the economic calendar ahead of Friday, multiple days in advance. If you have some sort of protocol like this, I think it's very beneficial because you're able to, number one, check to see, is my reasonable protocol and bias walking into that day without seeing any price action correct? And if you can develop that skill, it's very, very useful because then you kind of can walk into that day before even seeing any price action and kind of know what you're looking for. So I was already looking for, okay, if the weekly objective has not been met, which in this case it was not, this case may be best to enter before the news on this day. Otherwise, you have a different kind of scenario. So in this case, bias of liquidity from the higher time frame here was left unfilled. All right, we came from an inefficiency on Monday being filled, so inefficiency IRL up to ERL buy side. So you have multiple different entry points using PDRAs, order blocks, whatnot, fair value gaps, all before the news driver. News driver eventually runs up and rips into that buy side liquidity, and you have some exit SMT stuff going on at the highs. Like I said, more in-depth stuff about today's price action will be in that tape reading stream from this morning, which is already linked into the YouTube vids section. So if you want to go back and watch that, you can. So overall, not too challenging. You have some entries after that are offered. 1050 macro offering this run back inside the range and kind of as a TGIF sort of type of mentality. If I go back to the 1 hour chart, you can see the close here relative to the open. Since it's kind of an expansion week, right? You see the -2, -2.5, sorry, 0.2, 0.3 in price kind of staying and closing right within that range, almost right on the dot. So very funky week, very challenging week. And that's why I think it's a very good week to kind of come back and review on psychologically and what are the things you're looking for to improve on. So on these weeks and obviously for this month, how do you stay level-headed and not go insane from challenging PA? And you're going to obviously come across this kind of price action every year, whether it's a challenging week or a challenging month. you need to have some sort of silver lining in place that makes it so you do not start over trading and over leveraging because you get frustrated with price action. That's pretty common. It's a common thing. I've done it before. I even almost did it this week on Thursday, which was getting frustrated with price action, kind of just not doing the what stuff you want to do and getting on the verge of over trading or just taking setups that aren't there can be damaging to your overall equity curve and obviously your psychology as a whole. So we're going to first answer the questions I had about price action, then we'll go into the journaling part. So I had a question from the general chat from SecR3T, which is a good question, which is talking about how order block placement. So here's the question right here. We talked about how, curious if you ever come up with parameters or certain situations when it's good to place your stop below, say for bullish, right, below mean threshold of an order block. Curious what your thought process is on this, really trying to refine and improve that stop loss placement. So it's a good question. And first we'll kind of look at what the criteria is, obviously in the first place, to even put a stop underneath an order block. So order blocks are the PD rates you're looking for whenever price is expanding, but also reference points inside of other PD arrays that is used as almost efficient delivery, right? So changes day delivery, breakers, order blocks, all that kind of stuff are thrown into that category of efficient delivery. So when you see something like a fair value gap and it's paired with a high quality order block, you expect that order block to be most times traded into, especially if there's a plethora of different gaps. You're looking for that gap and that order block to be used together, tag that reference point, and then continue to move lower, especially when you pair that up with a key time. Like in this case, this is 11 o'clock on the dot, right? So you have macro time, etc. And you're looking for it to roll over. Breakers and mitigation blocks and whatnot, you have different rules, but same exact kind of thing. You have down closing candle range, displacement up through it. In this case, you're looking at a mitigation block from the 5-minute, and that's going to be your entry. So it's a very precise level inside of the gap most times that you're looking to trade. And especially that, there's other ways you can trade order blocks itself, but this is kind of the one that you're commonly seeing. And this is the one I'm going to frame the question off of. So assuming this is the way that you're getting into the trade, you have to understand what obviously a high probability order block is. So in terms of strength of OBs, you have top 3, which would be basically mitigation, breaker, and preferably a propulsion block, but let's kind of throw that out of there. So mitigation and breakers, very strong PD arrays that most times when you are trading them, since if they're proper breakers or proper mitigation blocks, the presence of them alone, especially paired with displacement, price action should not be trading below those mean threshold pools in general at all, right? There's a few situations where you may see that, but if I'm looking at a very standard breaker, something like this, I'm bullish, I don't really, as long as there's a gap in premium lining up with the premium end of that breaker, I don't want to see price action drop even into mean threshold of that at all. So normally when you're trading breakers, I put them underneath the breaker entirely, but in situations where you have clean gaps and whatnot, you can only put your stop at mean threshold of the breaker or the mitigation block in this case. So here you have the same exact thing. You could put 50% here. Obviously now when you have other PD arrays that are going to be supporting that, you could probably refine down the stop loss placement, but that would be kind of one rule of thumb. I'm not going to get too much into propulsion blocks because although useful, I just don't think it's the best PD array to study as a new student or even as a seasoned student. It's just not something that most people are going to find super useful in terms of the tape reading or executions. But propulsion blocks, same exact rule. If you properly identify them, they're 50% kind of PD arrays as well. But for standard order blocks, normally if you're gonna take a trade off of this kind of thing, put it at the swing high or above the order block entirely. All right, you're looking for obviously strength in price action and combination of PD arrays in order to place a stop loss below mean threshold or above mean threshold. Okay, so typically just look at breakers first, see how those are holding, and normally the position of the fair value gap in relation to that order block is going to tell you as much as you need to know. So when you see efficient price delivery like this and then a gap up causing an inefficiency, with that PD ray, with that order block. You do not expect, what would be the reason as to why it has to come back to 50%, right? Same exact thing in here. In this case, this is a lower, it's a high quality, high probability order block, right? So mean threshold would be here. Now, I think you might as well just put it up into the open of this case, since this is not a propulsion block or a breaker. So this isn't a scenario where I would put it at the top or at the swing high. That's kind of the general rule of thumb. I think that's the easiest way to answer the question. There's going to be other scenarios that are awfully specific as to where you could trim it to mean threshold and whatnot. But as long as it's a high probability order block, preferably a breaker or mitigation, you can kind of no brain put it at 50% or one tick below mean threshold and be okay. You know, other times there's going to be nuances as to when you should be putting at the top. Like I said, if you're trading a standard order block, just put it at the top of the order block. You'd be fine. Unless you're looking at some very high quality position that be available as a SysD or something, and you can put it at mean threshold there. But like I said, for the most part, that's the kind of general rule of thumb and probably the easiest way to look at it in the beginning. And then as you study how those are printing in the first place and refine down an entry model, then you can look at kind of more specific nuances as to when you would trim to mean threshold. But the easiest way to look at it would just be put it obviously below the order block entirely. I know that a lot of times that can sometimes be too wide, but if you pair it with gaps and swing lows and whatnot and breakaway gaps, you should be perfectly fine, right? I think there was, so hopefully that answers the question. I think there was maybe one more right above that. I'm forgetting. I don't think I am. Anyways, if someone's in here who still has a question, you could put them obviously in the chat. But I had another question from someone I have one-on-one calls with pretty frequently, talking about journaling. Like, what do you? Let me actually read the question out. I'm sure he won't mind. Feeling I'm not learning well from my journal, good days or bad days, I use Notion. Can you please give some tips on how I can document and learn better? All right. So journaling is obviously one of the most important things that you could do as a trader, because it keeps you sane, number one, but also is kind of your tool to defeat any psychological issue or technical issue that you'll find in your trading. Because when you really look at it, this is a professional game. All right. You look at the stats, 20%, right? 20% of people who take evaluations pass their evaluation and go into a funded stage. Okay. From that, 10% get a payout. All right. Now think about how many people obviously get consistent payouts from there on. So when you're talking about numbers here, every single Discord included, right? General population of traders, only about 5 to 10% are profitable. If not that, maybe lower. Okay. And that's obviously from a trader pool. So it's not from general public, that's from a trader pool. So you can look to your left and look to your right, even in this call, and those statistics are probably going to be true. So if you do not treat yourself like a professional athlete in some way, you're not going to see the results that other people are going to see. Simple as that. Okay. So if you're not putting in the work, if you're not being consistent, if you're not journaling, you are not going to see consistent success. Period. Full stop. Okay. That has to be said, because if you're expecting different results because you're the exception to the rule, I promise you, wait 2 months or wait a month and everything will come crashing down because you're getting lazy at your job. All right. This is a fantastic job and I'm blessed to have the opportunity to do it. But there are things in place that I have to do regardless of how I feel, regardless of how I perform, because those are the things that are the job application. Okay. If I do not do those things, I will fail. Okay. I'm not any different. You're not any different. That's just the way it is. So journaling is one of those things that you have to do. Doesn't matter if you're 10 years in the business, 20 years in the business, 30 years in the business. ICT, I'm sure, still probably journals when he's taking a trade, or he should. So there's a proper way to do it. At least a way that I've found that's beneficial to me. You're obviously available to tweak and, mess around with this kind of style, but I found it to be helpful for me in terms of kind of trading. So first thing I'll mention is obviously the definition, or Einstein's definition of insanity, is doing the same thing over and over and over again and expecting a different result. So if you're trading, taking setups, right, doing, maybe you're over trading, over leveraging, and you're not looking at how to fix it, you're going to get the same result, right? You have to be actively changing the way that you think and the way that you trade to get the results that you want. All right. So number one, you're an athlete, professional mental athlete, right? 90% of people can't do this and probably will not do it. If you do not improve on your technique, you're basically just insane. You're going to get the same results you always got. So what is proper journaling? And obviously, what is, I guess, the silver lining you get out of journaling? So Mark Douglas is obviously a famous trader, and he summarized 2 of his books. The silver lining you get out of trading is learning, right? You're always going to be learning. You're never going to be a 100% trader. You're never going to win every trade. So the silver lining in this is the fact that you get to learn from your mistakes and learn from the things that you do well in order to, be profitable and continue in this. So I play sports, I play games. One of the more fun things for me is, adapting my play style. Adapting, like in football, I play a position called a defensive back. I have like a flag football league. So to me, I'm working with no data. I have to read my receiver and make judgments based off his positioning, based off his footwork, of what the route's going to be, jump the route, or potentially, kind of cover him in a way that it's uncatchable. When I fail, I immediately go to my safety. I immediately go to my DB who's playing next to me, and I say, what did you see? What can I do better? Right? So when that same exact play comes up, I know exactly when it's going to be. I can go pick off the ball. I look at trading the same way, because I'm not going to be able to see price action every single time perfectly. So the silver lining is the fact that if I'm able to learn from my mistakes and learn from the things I'm doing here, and I can improve my mental model or improve my approach to the trading. And sometimes it may be, don't jump the trade here, or don't take the trade at all. That's still a beneficial thing that I can extract from my journal. Okay, so now you understand the necessity of journaling. Now you understand kind of what you're getting out of it, which is always to be learning. How do you do it properly? So the way I'll pull up some examples from my own journal here, but the way that I do it is I split it in 2. So I think most people should be doing this because it kind of makes it easier, I think, for your mind to kind of process the data. But you want to be splitting your journal into 2. Okay, and this could either be on 2 different documents if you want. I just have it as 2 separate paragraphs, but I have the technical side of it, and I have the psychological side. Okay, I want to make sure that these are completely, not intertwined. So the technical side of it is going to include my entries. It's going to include, so I'm basically going to be listing what I did to get in, what was my potential P&L on the day. Obviously, I'm logging that in some sense. My entry, maybe techniques I could have done better in terms of my bias, etc. So the general thing that you should be doing from both of these is, number one, what did you do good? What do you need to improve on? Right, possible flaws in the system. And then always, obviously, reinstating pride and gratitude into your system. All right. So you're always looking at, obviously, what did you improve, or what do you need to improve? What did you do good? Possible flaws in the system. And at the end of it, and throughout it, you're always keeping a positive mind, not saying anything negative, not saying anything of what if, or should have, could have, would have, because there's not really anything beneficial in that. You're always going to say, for the next time, I'm going to do this. Because if you take that experience and obviously use it as a catalyst for improvement, you don't look at, I'm not going to do something and say, oh, I should have done this, because it's not really learning anything if you frame it that way. Some people do, but I think when I say, okay, I should have done this, or I could have done this, it's more pouting about the outcome and what could have been, instead of actually addressing my issue. So you're always keeping a positive mindset. You're always reinstating pride. So I am proud of doing this. I am proud that I'm journaling, right? And it's always about your system and processes over P&L and execution. All right. So never are you going to say, I am glad that I'm green. I am glad that I made money. You know, today was plus 500. I could have made plus 700 if I did this. There's nothing beneficial in there because you're striving for something that is not going to bring you satisfaction, number one. And number two, you're chasing things that are outcome based instead of process based. If I chase P&L, if I chase green, if I chase green weeks, green days, whatever it is, that is eventually going to not be satisfying enough, you know, whatever number that is or that green. And I'm going to keep chasing. And you exactly know what happens when you do that. So instead, we are instating pride and gratitude and about the process and system over the P&L execution. I am proud of myself for journaling today because you probably didn't journal the day before. You know, I am proud of myself for turning off the charts when I should have because that is part of my process. I am proud of myself for skipping on the trade because that's what my system says. Okay, it's completely obsessing over your protocol and system and almost becoming a soldier to it in some way. But you're not going to be able to do that until you absolutely trust what that model is. So you're going to have to fail a bunch of times, probably by breaking your rules, in order to get to a point where the only way you understand how to get out of that and get into the place of profitability is by following your rules and properly trading. Okay. You probably already know that, but some people have to, like myself included, have to experience a whole bunch of pain until you realize, yeah, I can't take it anymore. Let me just try and figure out what's going on here. So this is kind of what you're doing on both ends of this. So the technical side of it, like I said, you still want to be logging your P&L for the day. I'm not going to completely avoid that. I still want to log that. Okay, so I have some sort of record of it. Logging my entry. So you should be providing a screenshot. And if it's uncomfortable to take a screenshot of your P&L, or not your P&L, sorry, your executions, probably because you know you're not supposed to be doing that. So every little bit of discomfort you're getting from your journal is where you're growing or where you're being aware and taking responsibility for your actions. So if any of this is uncomfortable, that's good. And it should be encouraging to you to actually start journaling because what you're doing is you're approaching the parts of your brain and the parts in your trading that you don't want to approach. So if you don't like journaling when you lose and you just like journaling when you win, that's a problem. You don't like taking screenshots of your executions because you know there's too many executions there, that's a problem. You don't like taking a screenshot of your PN or of your whatever it is because it's uncomfortable, that is where the problem lies. And the sole fact that you're avoiding journaling is what's going to keep you from, it's going to keep you insane because you're going to get the same results you always got and then complain as to how come I can't do this? It's easy, okay? Just do the work, show up, do the work, stay consistent, boom, you're profitable, okay? Simple as that. All right, and some people have to be told in that manner to fully understand. I don't like doing that, but that's just the crude reality of it. Okay, so you have to split your journal into two, and I draw a fine line between the two, so I make sure that none of this stuff, my P&L, gets into my psych part. Okay, because if I'm talking about P&L, I want to just be a log and have nothing to do with, okay, what's actually in my mind. Okay, I have to dig deep into what's in this part. So entry, P&L, obviously kind of improvement on bias. This is also going to have a part two, which is going to be your actual review of price action. So at the end of the day, every single day, you should be deleting everything off your charts and taking screenshots or reviewing basically what did I get wrong? How did my bias maybe not play out? How did my entry maybe need to be properly refined? Maybe my stop loss needs to be properly refined. Those are all technical sides of trading that need to be improved upon. And obviously, everything kind of related to your execution and style, you should be learning new data. Okay, learning new data about your technical side of it. And this is the silver lining, is the fact that, okay, you can win. What do you get out of it? Okay, what can I do? What can I improve out of this? Or what can I keep from this that's going to improve my model? When I lose, okay, this is just a data point that I'm getting basically with my tuition of payment that I'm getting for this data point into what is wrong with my model, or what is wrong with the way that I read price action today, or what is wrong with the way that I expected high probability conditions here and took an aggressive trade. All those things are learning points that you should be gathering. So then that week, that is something, or the following week, that is something that you can improve on. Okay. I asked a question to someone yesterday. It was later at night in person, someone that was personally mentoring. I have two people that I'm personally mentoring. But I was asking one of them, what what are you learning new? Because I feel like he's plateauing in his growth. I'm like, okay, what are you learning new this week? He's like, oh, I'm just journaling and doing the same stuff. But it's like, okay, name the thing that from this week that you learned and you're improving on. Couldn't name it. I think that's a problem. And he won't mind me stating this because you don't know who he is. But I feel that's a problem. Is if you cannot say something that you learned from the week or something that you're going to take into next week and improve on, then what's the point of of taking the executions at any point? Because you're not actually going to find any satisfaction from the P&L. You're probably going to plateau. You're probably going to stay in the same exact area, and you're going to sit right around break even, because then your trading gets more and more driven by psychology than it does from the technical improvement of things. All right. So the things in my game that I suck at, I'll try and identify and improve on. So in the fall, I knew that I was not the best at weekly profiling. It was something that I was neglecting a little bit. So what I did was, okay, I'm going to focus more and more on one shot, one kill, on weekly profiling, on kind of understanding what's going on from the week. And I feel like I made some gain and I took some ground on that kind of area of my analysis. And the part of your analysis that always needs improvement is bias. You should, the goal is before 8 a.m. even opens, you should be able to say at what time and where price action is going to go by every 20 minutes. That's a point where, okay, you probably have a very deep understanding of price action, but I can't do that all the time. You probably can't do that all the time. Some people can't even do that once a week. Not to be, that shouldn't disappoint you or degrade you, but instead look at how much room you still have to grow. So I can try and do that sometimes, but I'm not perfect at it. So I know there's still room in my trading that I can grow, and I'm 5 years in. So these are all things that you have to be gathering from your journal in order to keep yourself sane, and also kind of enjoy the trading part of it, because you're not going to get satisfaction from a number. You're not going to get satisfaction from a payout. You may think you are, but as soon as you get that, about 2 minutes later, you realize, okay, in order for me to get the next one, I got to do the same exact stuff. And if you start thinking about the payout and you start thinking about the P&L and the number, eventually you blow up the account. So you instead realize the necessity to just completely be obsessed with the game. Okay. Of just, okay, I need to, I like winning, but I also like just absolutely dominating in sports my opponent, to the point where I know my team's going to win if I do my job, which is to absolutely make sure this guy does not catch a single ball on me. So I love that part, which is just absolutely refining my game, refining my craft to a point where no one's going to catch me. So that's the technical side of it. That's the kind of the most important part in terms of finding actual data points that you can grow from. Same exact thing applies to your psychology. Okay. So this is going to be the part that requires a great deal of introspection and a great deal of awareness, self-awareness, to actually find root causes. So psychology would be things like, it's things that are unsaid and things that are hidden within your mind that sometimes have illusions that hide them. So let's say, like, you take a trade, you get partials off, and you get break even. Then you take a second trade and you blow all of your profits that you gained from the first one, and you go back to break even, you lock yourself out. There's going to be a technical side of it, which is maybe that second trade was not valid. But then the psychological part of it would be, okay, why did I feel I needed to take the second trade in order to get somewhere? Maybe it's trading the P&L, which obviously is a psychological pitfall. But maybe it's because you felt like that was a free trade. Okay, I made my profit, or here I'm deep into into profit here on this week, I can risk a couple of trades here and try and push, which is a flaw mentally, which is, there's two parts of it, which is true. Sure, yeah, you're in profit. You can maybe risk more because of that. Makes perfect logical and mathematical sense. The flaw in that thinking is the fact that why are you risking your profit and your gain from the week? Because there's no such thing as a free trade. Every trade is incurring risk. So there's no such thing as, okay, I'm now in profit, I can take this extra trade because it's risk free. There's no risk free, there's no free, that doesn't exist in trading. So every single trade you take should not be based on P&L, should not be based on some sort of distance you have. It should completely be based off of, is this my process? So you'll find these kind of pitfalls that create kind of actions and ways of thinking that lead to technical errors. Okay, and these are things that you think whilst you're trading. As soon as you kind of understand how they work, you'll be able to spot them more. But what happens is you think something, and those create actions which then lead to your technical errors. So a lot of times you can work backwards, which is you find your technical errors and technical things that you messed up on, and you can go back to kind of realize, okay, what is the psychological thing that prevented me from flipping bias? Which that's a good one, right? Today, for example, technical error I made was not trimming my stop a little bit earlier or taking something off as soon as I saw SMT at the highs. I had mentioned the fact that, okay, if the rest of the session is going to be bearish, or the day is going to be bearish, which I expected it to be since the TGIF, I was still looking for a new high post 1030. Reasonable, okay? ES had made a high post 1030. I said, okay, here's the SMT. If this was going to be the high of the week, you know, that's expected, and we're going to see it trade back into the range, and that's exactly what happened. So what I was doing was the technical reason is, okay, we traded into an IRL on Monday. Let's go to the daily chart. Traded into an IRL Monday, and we should be looking for buy side liquidity as the preferred external range liquidity target and a weekly objective for the week. I was looking for this as my external, as my take profit, full take profit. So I didn't get filled out there for a couple of my about 70% of my trade there, because I wanted that, and because I wanted something so bad, and because I saw also the data that would suggest me being wrong, my brain purposely filtered out that data point that suggested I may be wrong on my analysis on the higher time frame and obviously the lower time frame, and prevented me from maybe taking something off or taking more partials when I could have. So the psychology part was, okay, I maybe didn't want to be wrong for whatever reason. Now I can go into deeper into that, is the fact that I wanted to showcase something on stream. Is it because I had a challenging week before that and I wanted a full take profit just to kind of say screw you to the market? There could be a bunch of different psychological reasons, right? And I'm going through that in my journal. But each of those things are important, because what you see is they create these actions technically, either of me not getting a full pull, or of me maybe trimming my stop loss, or maybe because after that, you end up taking an extra trade or extra 4 trades, whatever it may be. So there are psychological errors that you'll find are linked directly to their technical actions. And a lot of times you can find these kind of repeating sometimes inside of your journal. But it is really just kind of identifying ideas that aren't aligned with process-based thinking. So instead they're outcome-based thinking, right? But these are kind of the two things that, I guess another way would be anything related to P&L. Let's say speed of growth. So what you're trying to find here is ideas and thoughts that you had throughout the session, or pitfalls that would have led you to technical errors that are not aligned with process-based thinking. That's it. Okay, you are supposed to be a process-based trader, not an outcome-based trader. So any ideas or thoughts, or even lies that you tell yourself, which is really what psychology is. It's just misconceptions you have about a market and you act on those misconceptions and lies that you tell yourself. And what happens is sometimes you keep telling yourself those lies, or you don't realize you have them, and that's what kind of creates these repetitive results of swinging back and forth. And obviously you're still doing in the way of this. So you're obviously, what do you do good in psychology? Okay, psychology of the day. Okay, what do you need to improve on? That should be this part, right? Possible flaws in the system, and then obviously reinstating pride and gratitude into your system, and process over P&L and execution. So you're saying, okay, for the next time, these are the things I need to be aware of. And psychological errors are as simple as just believing that you can think differently. Okay, if you believe that you can think differently, it should be just as easy to release yourself from these ideas, because in reality, we're trading candles. Okay, you have misconceptions about how the market works. It should be very easy to just release yourself of that and think something new. Simple as that. If you overcomplicate it, you're going to have problems. But it should be simple as understanding the truth. The truth will set you free. Release yourself from those beliefs, replace it with a new belief. Okay, so you find these psychological problems, you identify and reason as to maybe why they're partially true, and then you fix them. And now you have a new sort of, what you get is injecting logic. So there should be a 1 or 2 sentence statement that you can read, preferably out loud at the end of your journaling session, and that fixes maybe an error or 2 that you get from that day of data. All right. So these are things that you have to be doing, obviously, to properly journal. So I made it this. Let me show you. Let me see if I can find. I'm trying to find an example of a good journal day that isn't too personal. Here you go. So this is one from earlier this week, from Tuesday. This is the kind of integration of both sides of it, but I'm trying to be positive in my manner, but also kind of looking at things that I can improve on. So proud of my execution today. So reinstating my pride into what I did well today. So proud of my execution today and the way I managed myself after. Walked in, got my setup, walked out, traded my plan, planned my trade. Proud also of how I did not get greedy or try to do things outside of my process. So here's the things I can improve on technically. Could have been better slightly on the execution side of things, maybe slightly earlier on the SIST and pyramid on the gap with maybe a hold post 10. So some just things technically that I could be looking at. And a side note, you don't really want to just be saying, I could have done this better. This is actually this is a bad example because I didn't actually go too much in depth. I should have. But what you want to be doing is when you're doing your review after, you should be looking at, okay, here's the thing I could have done better. And I say could have been done better for the next time. All right, that's what I should have said. For the next time, this is what I could have done better. But what is the situation that would have pointed to me potentially doing these things? Okay, and I already did this on Tuesday with my review, but I know, okay, I had standard deviation targets that were lining up with higher prices. I also had low of day forming earlier, so I could be looking for a post 10 London close swing high. There are different things that the situation would have showed me, okay, this is this example where I can use that data point I was talking about before and hold longer. So it's more so the environment that would have produced that outcome. It's your conception about that environment itself from the start that obviously made you act in this way. So I had cut my trade short, and that is due to the price action that was surrounding that trade. So what I can learn from is, okay, when I see this type of price action and when I see this type of pre-market price action that leads me into my bias, I can actually then assume I can hold my trade longer or I can take a more aggressive trade because this is the kind of data that I'm getting out of it. That's the more important part, because then the next time that you see that type of price action, you'll know, oh, this is that one time that I can do this. And it may not be conscious, it may be subconscious, where now your execution is actually 2% better. Okay, it doesn't have to be 50% better. You're just shooting for a 1% increase. And as long as you have a 1% increase over increase, it's a 30x increase on the year. So you should be looking for technical and psychological things in both ends. And realistically, if you do this right after you're trading, this may add an extra, 10 to 15 minutes if you do it properly. Okay. And then your post day review, this part, that should add an extra maybe 20 or 30 minutes if you're slow at it. If you're just speed running it, you probably could do it in 10, 15, but total, this adds, or not adds, but takes, let's say 40 minutes on average. All right. With both things included, 40 minutes. Okay. Your trading alone may only last an hour. If you're trading from 9:30 to 10:30 or 9:30 to 11 o'clock, right? So you have an hour and 40 minutes of work that you need to be doing as a professional athlete in order to make this work. It's not a lot of work. All right. So if you say you're too busy to journal, that's a lie, because if you're doing this trading thing, you should have time for that. And it really isn't a whole lot of stuff. Okay. You don't have to be studying from sunrise to sunset. It's more of just making sure you're doing high quality work for the stuff you got to be doing. As long as you're doing that consistently, you're perfectly fine. So, waking up at the right time, making sure you have some sort of bias in, making sure that you have your psychology in check beforehand. Make sure you're trading properly, make sure you're journaling right after, and make sure you're reviewing. Like I said, it only may take total 2 hours out of your day. But if you're skipping out on parts, how can you expect it? How can you expect to have a well-rounded game if you're missing things? Okay. Take Shaq, for example, right? Phenomenal basketball player. Imagine how much better he would be if he could hit a free throw. So because he neglected that part of his practice, sure, he's still a very high tier athlete, but he's holding himself back because he's not doing work that probably could have been done. So look at yourself in the same way. You have areas in this game that need improvement and areas in this game that you're very strong at. If you just look at the strengths and don't look at the weaknesses, you're going to stay and get the same exact result that you always got. That's the uncomfortable part of journaling, is the fact you're going in and you're looking at your weaknesses and identifying your flaws, pointing them out to yourself, and fixing them. It shouldn't feel super uncomfortable, because when you really think about it, this is for you. Okay, that's why I don't really share a bunch of my journaling stuff, and neither should you, which is, a lot of it is personal. And you don't have to feel like this is for everyone to see. So you're going to have flaws and you're going to have problems, but you have to be addressing them. All right. So journaling is not just saying, today I did good. Today, here's my execution. And there's nothing about it. That's not really gating anything out of it. That's more of a log than anything. I'm not interested in logging. I used to do this, which was, I would have a spreadsheet of all these different things, and I would say, okay, I'm long or short, 950 macro, execution style, this, and it was like a checkboard and stuff. That to me is useless, because I'm not going to go back in and say, oh, here's what I actually did wrong or did good in these different scenarios and all my shorts. I can go back and see all my shorts and look at my 950 macro shorts in all these cases. There's not really much I can learn from that. Technically speaking, the most I'm going to learn from is just doing a full markup. Go back in, delete everything off my chart, remark out the data as if I had seen it properly. That to me is going to give me as much data as I need to improve on it. So then journaling part should not be super Excel spreadsheet wise. It really should just be, a couple of paragraphs to yourself on your performance of the day, kind of just reviewing it, and preferably also, side note, it should be as soon as you can after you're done trading, preferably right after. Maybe you go get a drink of water or go eat breakfast or whatever. But if you have those thoughts fresh in your mind and you don't let them linger and you don't forget about stuff, it's best to do it then. Obviously, no journaling or some journaling is better than no journaling. So if you have to do it later in the day, that's fine. But I think the best thing you can do is not have those thoughts lingering throughout the day and have them create possibilities of you making more mistakes because of it. Because to me, if I have a bad trade, and I'm like, I could have done something better there, and I let that sit for the rest of the day, every single kind of moment I have of thinking about the charts, I'm going to be reminded of that thing that I did today, and it's just kind of eat at me throughout the entire day. It's not going to ruin me, but it's definitely going to eat at me in my mental, where I'm going to be thinking about that. If I journal immediately after trading, and I remind myself, okay, nothing's wrong. I'm going to get out of this drawdown quickly. Here's the things I can improve. 20 minutes later, it's not a big deal. I'm fine after that. So there's data points that you can get from this and ways you can do it right. I think if you have to take anything away from this is 100% cut a line between your technical side of it and psychology part of it. Okay. Use your technical side of it to link any psychological errors, find those flaws, make sentences that can obviously fix those things. And obviously going back in, and if you want to improve on your technical side of it, I promise you doing these post-day reviews is the easiest thing you can be doing. If you're struggling with those or kind of don't know what to do with them, go back onto the YouTube channel, and there are plenty of examples of post-day reviews from November and from October and probably from September as well. There are all of those that are just completely deleting everything off the chart and remarking it as it should. And maybe tomorrow we'll do one of today's price action just so you can see what that looks like. All right. So I don't want to go too long, but hopefully that kind of answers some of the questions regarding journaling and how to do it properly. Yeah. And so there's a couple of questions in the chat. Let me read those. Saint said, have you ever used ChatGPT as a second pair of eyes for you, installing your system and training AI to help you? If not, have you ever used it to help with the psychology or technical side? I haven't installed it into my journal or anything like that. I've definitely asked it questions of, here is a problem that I have. What do you think it could be linked from? That's kind of what I'm thinking. Is like, okay, I have this psychological issue. What do you think is the root or stem that I'm getting from this? I'm not, to be honest, I'm not super concerned with having a second pair of eyes. I would say just read a couple of trading books, psychology books, and you'll kind of get the hang of it. So the ones that I would recommend is Mental Game of Trading by Jared Tendler, and then Disciplined Trader by Mark Douglas. Realistically, those are the only two psychology trading books you'll ever need. So yeah, I guess I'll just leave it at that. I guess another one would be Think and Grow Rich, but not a psychology book related to trading, but one of the most OP books you could probably ever read in terms of making money in life and just being very successful. You want to cheat code, this is the book. But these three books really, and you'll understand psychology in a whole different manner, and your journaling will be a whole lot better as a result. All right. Abu Musa said, kind of the same thing with me. Trades I shouldn't be taking, I hold back on, and trades I should be taking, I've got to get in and take the risk. How do I overcome this? It could be, okay, number one is obviously if you do not have a lot of experience with your model or do not trust your model, that's going to be the thing. So you're going to see it, and then the setups that you should be taking, you stall on because you've had bad experiences in the past. And then the ones that are not so good, or the ones that maybe seem good, you get in too late and you end up, taking a very bad trade because of it. So that hesitation normally comes from a lack of trust or a lack of understanding of the model itself. And obviously, sometimes it's a misconception about uncertainty. I'm uncertain when I'm taking a trade. Whenever I'm putting on a trade, I'm still uncertain, and there's a bit of fear. As soon as you click that button, you're like, oh my gosh, I could get stopped out. That may last for a split second, but that is the game of trading, which is there's always going to be uncertainty. So you're never going to really have some sort of flashing bulb that's going to tell you when to get in. But you have to understand, okay, if I diligently study my model, if I really look at it, I understand it, I have the data here that supports as to why this should work. As soon as you see it, you should be able to say, okay, this is where I'm getting in. Also, make sure you separate the high probability and low probability days. But realistically, just gain more experience in it. I would say even if you want to, you could take time off. So take time off in terms of live trading or demo trading, whatever. Just simply watch the charts. And as you do that, you gain trust in knowing when you're not supposed to trade, when you are supposed to trade, what your model looks like in different scenarios. And therefore, you just get a whole lot better executing. But also, I think this as a whole will help you out a whole lot. Right? Do you share your Notion templates? I have a video on it in notes and review or peer reviews. It should be pinned. If I have a mod in here, if you can send it to him, that would be great. This is here we go. I found it. Never mind. I don't have a Notion template specifically, like a public one or anything. But if you're struggling to set up a Notion, this is a video that's helpful to just set up a notion. I have other notions that I've made for like P&L tracking and stuff like that, but realistically, it's not terribly difficult. But if you're struggling with it, it may be something I'll make in the future. All you really need to do is just make a new window and open up a calendar view, and you're fine after that. But that video should really be beneficial in anything that you're looking for. All right. You got any more questions, psych related or technical related? You can put them in the chat. Otherwise, we'll wrap this up. What's up, Fatal? How do you recommend setting take profits? I know that you hold for time and price, but sometimes when I apply that, I reach for too much or too less. I have thought about taking partials, but I don't like that if it messes up with the RR at the end. I still consider trying partials, but I prefer just one TP for clear RR. What's your approach / recommendation? Okay, so I'm going to say something that's maybe controversial, but RR is hypothetical. So you look at the numbers, right? 2R, 40% is profitable. That does not mean that someone is going to have 2R and 40% every single time, right? Win rate's going to be hypothetical. Perfect RR also is going to be hypothetical. I don't condone trading strict RR because I think you're limiting yourself, right? If I were to just take a 2R every single time, the trades that I could let run to 6R or 5R or whatever, I'm cutting myself short. So I don't think that trading strict RR is reasonable for anyone besides maybe a new trader trying to study. So RR is hypothetical. So when I'm taking partials, I'm not too considered with the fact that, okay, I'm messing up my perfect 7R. I'm more concerned with the fact that, okay, I'm paying myself. So even if it comes back on me, I'm getting something out of this trade. I can also move my stop to break even. So I'm risk free. And obviously if my full TP hits, that's great. So a lot of that is not trading the P&L, it's trading the execution, it's trading the process. So my process states I need to pay myself. I am not most times going to take a full TP from here to there. That's just the style that I trade. So I'm not going to say that not taking partials or taking partials is perfect every single environment. But as a result, if you're just trying to pull one TP, you're probably going to be, having to minimize the length of your trades in time and price. So I realistically, so like you said, I'll set my full TP for a level that I think is going to be high or low the session at a minimum. So if I'm going long or whatever, and we just swept salsa liquidity, I'm looking for a 15-minute IRL in premium. Okay, that's probably where my minimum TP is going to be. If I think it has room to run up to this buy side or whatever it may be, I may put my full TP up there, but then partials graded kind of along the way. So I think knowing kind of what your expected terminus is going to be comes from practice and comes from alignment of multiple things. Like I said, time, price, standard deviations. You have all three of those. It's a pretty good exit. And sometimes, my TP is too far. Like for today, for example, I got partialed. My TP was a bit too far. I got stopped out and break even for the rest of them. And that's just part of it. So I'm not going to be perfect. I'm also not going to always shoot for a specific RR. I'm throwing my TP here. I'm putting partials. The rest of it, I'm praying that I'm right. I'm not going to have some sort of specific level that's going to tell me this is always going to hit. There's always that kind of uncertainty part of it, which is you may get stopped out. You may not have a full TP. I do think, though, in order to hold longer and longer, you need to be setting closer TPs and setting closer RRs. So, for example, in 2020, early 2024, my goal was 2.5R. That was like my terminus is if I can get a 2.5R, I'm doing great, or 2R, I'm doing great. And I found it very difficult to see anything past 6R or past 2.R, 2R or 2.5R. So in order to hold longer and longer trades, you have to be lifting the small weights. Okay, take a quick TP, 2R, look for 2R for 3 months. All right, and I say hypothetical 2R. Okay, so whatever swing high or swing low is in close proximity to that, take that. Right, then put an 80% partial at 2R and leave 20% for maybe the next TP, and you should be able to tell where it's going to and maybe how likely it's going to get there but I also use a simple rule, which is on low probability conditions, meaning where I don't think it's going to be expanding for a great deal. Maybe if I'm scalping, I will take 50 to 80% on partials, and then 20 to 50% full TP. On higher probability conditions where I think the price is going to expand maybe until noon or whatever, then I'll be taking 20 to 50% on partials and 50 to 80% full TP. Okay, so that way I'm kind of just making sure that I'm paying the trader, making sure I'm taking those tiny weights that make it so the trade is easier and easier to hold. But you cannot start out by trying to look for realistically, a full TP, because it's going to be challenging, because you're going to see, in some sense, you're going to be seeing the P&L move 75% of the way, and then you move your stop to maybe keep it wherever and maybe move it to break even, and then it comes all the way back on you. It's very hard to then trust, okay, I'm going to keep putting it there, because you're going to see opportunities pass up past you, So my suggestion would be start small. It may take time. That's perfectly fine. Okay, give yourself a month or two with each kind of level as you increase. But I really think that taking partials that's the way I was taught. That's the way I've learned, and that's the way that I've implemented. And I'll never have a problem with paying myself an extra $300 or whatever off of one micro, and leaving the other ones up to the highs. And if I get stopped out, boom, it's a profitable trade on that day. For like today, for example. So like I said, RR is hypothetical. You're never going to see someone probably just trading a strict 2RR. It's just going to be whatever liquidity pool lines up with that. You should probably have a minimum that you're looking for, but maximum or full terminus, always based off of a hypothetical level, I think is holding yourself short. So that's kind of my recommendation. Obviously, it may go against the way that you trade or the way that you think, but I think starting off small and taking those tiny little chumps, it may just be a 20% partial or whatever, but I think that just makes it so, okay, if I take a partial here, I can move to break even. It's way easier than to hold the trade for an hour, because you're like, okay, I already paid myself. It's risk-free. Boom. I can hold the trade way longer in that case than I would if I haven't taken anything off. I got to be really trusting that it wants to go all the way there, So if you're new, that's perfectly fine. I really didn't learn about full proper targets probably up until like 3 years in. Otherwise, I was just taking scalps every 20 points, So hopefully that helps. Anyways, we've been going for about an hour here, so I don't want to make this too much longer. If you got any more last minute short questions, you can throw them in the chat. Otherwise, I'll wrap this up and post it into the YouTube vids section. And like I said, we may do another review sometime this weekend, a short one, just kind of doing a markup. If not, we will do a outlook for next week, right? And I would also encourage you as well to go back to the weekly outlook video that we did on Monday. Okay, that is without seeing any data from throughout the week. I listed a game plan for each of the days as they followed. All right, I want you to go back and see, do those days line up with what we were expecting before any of that price action printed? Because if it does, then there's probably some value in doing that. If it doesn't, that's perfectly fine. But I think creating protocols, especially in price action like this, it's going to be challenging, is going to save you. Okay, December's notoriously difficult. So don't expect you're going to get some sort of macro continuation trade every single freaking day. That's not going to happen. All right, you're not going to see 930 go like this and a 950 macro trade like this, like you saw in the fall and spring. Just not going to happen. You may see this once a week max. So you have to accustom yourself to what's expected, how you're going to find setups, where you're scalping it to, things like that. And that way, this price action will be very easy. But as a result, what you're doing is you're creating protocols and creating manners in which to approach different environments. December, you approach this way. Spring and fall, you approach this way. The summer, you approach this way. And obviously, it's not going to be a script every year that you can follow. There's kind of a game plan you can follow. But when price action may surprise you, you're then able to switch gears very fluidly and say, okay, this is maybe my expectation was this. Based on the price action I'm seeing, this is actually pretty difficult, pretty low probability. I'm going to skip out here. Or maybe I'm going to scalp the 1050 macro here. So that creates way more opportunities and actually saves your P&L instead of just, I'm going to trade the 950 macro continuation every day. You're going to end up finding there's only one of those maybe max per week. Then you start freaking out because you don't get enough setups. Then you start freaking out because it's going to take an extra 3 months to hit your targets. And then you start over trading and over leveraging because you want to get there quicker. So you can see how there's like a chain of events that end up happening. So you beat those psychological pitfalls by improving technically and psychologically. So you have some sort of drawback and it's not drawback, fallback to which you can actually do very well on. All right. So I'll post this up either later today or tomorrow sometime. Obviously, it'll be inside of the YouTube vid section. Reminder to go and watch the tape reading stream if you want to, and go and watch the weekly outlook stream from the 1st if you want to. And we'll have obviously an outlook stream sometime on Sunday or Monday. All right. So take care of the rest of your night. Journal if you've not already. Review if you've not already. And I will talk to you guys very, very soon. Peace.